guys, you're welcome to today's content. I remain Synthetic Goddess. So in this video I want to do a quick explanation about a particular point of interest, and trust me, this is going to save you a whole lot of confusion about point of interest in the market. I noticed that a lot of traders struggle when it comes to point of interest. You just mark out any supply candle or any demand candle that you see in the market, and you expect the market to actually react from there, of which eventually the market might react, but eventually it will take you out. Now, here I'm going to give a deep explanation about just one point of interest that is very, very strong. And once you are able to master this point of interest, you don't really have a problem. In fact, you can use just this point of interest to keep winning in the market, and the goal is to be profitable, not to take many trades. Okay, not to take many trades. Now, when this setup comes, you know that you are risking a little bit higher because it is your high probability setup. So this point of interest works almost all the time. Now, if you're someone that don't trade every day, and then you are patient enough to wait for market to get to that point of interest, you will definitely see the good part of the point of interest. Also, I am also going to tell you the characteristics this point of interest must carry, so that whenever you are trading, you will be able to discern if that point of interest will hold, or it's going to be blown, or it's going to be reacted to. So the point of interest I'm going to talk about is primary point of interest, and I'm going to talk about the main candle you need to look out for there. Now, when we talk about primary points of interest, you want to be sure that you are following the trend of the market. Don't just mark out any point of interest in the market and then you just say this area should hold or anyhow. No. Now, this primary point of interest, you have to follow the trend of the market. Okay, so for instance, this is volatility 101 Hz. Now, if you don't really know where I'm getting this volatility 101 Hz, you can check in my description box. You are going to see how you can register for deriv, where you can trade 24 hours in 7 days. Okay, so let's continue, guys. So you can see that we are in an uptrend. I'm not going to look into this left hand side for now. I'm just going to talk about this right hand side for now. When we need to go to the left hand side, I am going to go there. So let's just talk about this particular move that occurred here. Now, the first thing you want to do is that you want to mark out your break of structure. Where is the break of structure? So over here, you can see we're in an uptrend over here. So we have our BMS to the upside, though it is with a little weak here on the 24 hours time frame. Now, this is a BMS to the upside on the 24 hours time frame. Now, I'm going to advise that when you're picking out your point of interest, you use the higher time frame. You can use the daily time frame, and you can use the H4 time frame. Don't go to H1 or M15. The reason is that markets might actually get to the daily point of interest and then it will start moving, while it won't get to the 5 minutes or 10 minutes points of interest that you marked out. But we have a zone on the higher time frame. If you are marking a particular candle out on the higher time frame, it is a zone on the lower time frame. Okay, it is a zone on the lower time frame. So we have our BMS over here, and where should we expect our primary point of interest? Now, your primary point of interest is the last candle before the general move. Now, some people will talk about base candle, some people will talk about other block uh inside your structure. Okay, no, that's not what I'm talking about right now. The last down candle, the last down candle before the general move, before we have a break of structure. Now you can see an order block in between this market. Let me just use, I think I should use, okay. Now, in between this structure, you can actually see an order block here. That's a black candle. A black candle can actually happen here, and a lot of people will mark it out as their order block for market to come back into the order block and continue, especially when we don't have impulsive movement to the upside. Okay, guys, when we don't have momentum and distance to the upside, where you should be expecting the market is your primary point of interest, not in between the markets. You can see that we only had a PMS to the upside. We actually did not have momentum to the upside. There was no much momentum to the upside. So where you should be expecting your market is inside your primary point of interest. So the last candle that happened before the general move to break structure is where you want to be looking out for. So where is the last candle that happened before we had a BMS to the upside? You can see this is a BMS to the upside. This is the last black candle. Yeah, they call it order block. Yes, you can call it order block, but this is the valid order block in primary point of interest. Now, guys, note, I am going to say it again. You can see a black candle in between this place. Don't mark out that black candle as your order block, because most times it is going to fail. Yes, it's definitely going to fail most times. In fact, 90% of the time that will fail. Reason is that we don't have a lot of momentum to the upside. We don't have so much momentum to the upside. You can see the market just broke it with a week here on 24 hours. But if we check our 4 hours time frame, we actually closed above this high based on the fact that we are in an uptrend. That is why I am marking this out as a BMS. Okay, guys, that is why I'm marking it out as a BMS. So this is the last black candle that we had over here. We had the last black candle over here. So you're going to be marking out this last candle over here on the daily time frame, guys, on the daily time frame. Now, if you go to your H1 time frame or any other time frame, you might actually miss out on the market. Okay, remember, we will also look for entry confirmation, so we're not just jumping into the market. Anyhow. Now, guys, I have marked it out. Now you are expecting your market to come back to this zone. Now, guys, one mistake I have noticed traders do also is that markets will not break your external liquidity. You will be marking out your primary point of interest. You will be marking out your primary order block. Guys, most times it will fail. If market has not taken out this high, there's no point you marking out this area. Don't mark it out until market takes out this external liquidity, which is this high that we've had broken here. You can see that we've had it broken here. The market has broken this particular high, and that is why I am marking out this area. Now, some people will say if it gets to this area or if it breaks this high, it simply means a break of structure, so they are marking out. No, don't do that, guys, until it takes out your major external liquidity. That is when you can now say, okay, this is where I am expecting the market to come back into. And you can see, guys, that it used it properly. And if we check the lower time frame, we are going to get our entry confirmation. We are not talking about entry confirmation right now. We are talking about our primary point of interest. Now, the characteristics of point of interest. The first thing you should look out for is, do we have a fair valued gap after that was created? Okay, do we have a fair value gap after that particular other block was created? Now, check this properly, guys. You can see we had this, and we have this. Can you see our fair value gap, guys? In fact, it is very clear. It is extremely clear on the H4 time frame. On the H4 time frame, you can see our fair value gap on the H4 time frame. So that is one of the major characteristics that this particular order block should be able to hold the market to continue the movement to the upside. Now, did this particular candle take out liquidity? Did it take out liquidity? Now you can see on this 24 hours time frame, which is the daily time frame, we took out our previous low. You can see we took out this previous low. This previous low was taken out. Now this particular low, this particular candle wick could not take out this low. Assuming this particular wick, assuming it took out this order block, assuming this wick took out this order block, this is the candle we will be marking out as our point of interest. Let me recap, guys. Let me delete this. Let me delete this. Done, guys. Now I'm going to give that explanation again. You can see that we marked out this order block. I marked out this black candle that I am showing you guys here. I marked out this black candle. Now this black candle wick took out the previous wick. It took it out. Okay, now this white candle did not take out this wick. It did not take out the black candle wick. Now assuming this took out this black candle wick, this is the candle I'm going to be marking out instead of marking out that black. So I'm going to be doing it this way instead, because that is the candle that took out liquidity, the last candle that took out liquidity. This is what I would have been marking out. This is what I would have marked out as my order block. But instead I marked out this black candle as my order block because it is the last candle that took out a wick on the daily time frame. So if you don't understand this, kindly rewatch it, guys. I'm sure I've given an explanation enough. So let's see for this, guys. You can see that we had a movement to the upside here. We had a movement to the upside and we took out this eye. We had a BMS to the upside here. We had the BMS to the upside here. This is a BMS to the upside. So we should be looking out for our sponsored candle at the primary point of interest. So where is our sponsored candle at the primary point of interest? Let's see this, guy. Okay, we had this. Okay, this white could not take out this, so this black candle is still our order block. This black candle is still our order block. But before, after the movement, after the creation of this black candle, do we have a fair valued gap? Do we have a fair value gap, or the market had already tested it? So let us look out for that, guys. As the market tested it, okay, we had this, and this is the next low. You can see, guys, we don't really have an obvious fair valued gap here, but we are going to be marking this candle out because it is the last candle. Now if we are not seeing a deep fair value gap, it simply means the market had already tested that order block before moving. Okay, the market had already tested the order block before moving. So let's just mark out this and see if this was what the market used eventually. Okay. Okay, the market did not use this place. Instead, the market came back to this area. Okay, guys, the market actually used this area as our sponsored candle based on the fact that this candle has been tested before. Guys, you have to be careful over here. This particular SC candle has been tested before moving. This one has been tested before moving. This has been tested before moving, and the market created in this area our demand candle. The market created a valid demand candle over here. This is our sponsored candle. This particular black candle is the sponsored candle. So the market created a demand candle because we've tested our supply candle, our demand candle. Sorry guys, because we've tested our sponsored candle. I don't know why I'm putting supply and demand candle. Yeah, this is they actually call this place also a demand candle, but basically I don't call it a demand candle. I call it my sponsored candle, because that is the last candle created at my primary point of interest. So I love to call it my sponsored candle, and this I am going to call it my demand candle because it has moved out of my sponsored candle and it is in between the market. So this is my demand candle over here. This is my demand candle over here. You know, we all have our different ways of approach to the market. So my own approach is that I call this my sponsored candle and I call this my demand candle. This is my demand candle over here, and my demand candle was very strong that the market came back to use that demand candle, and you can see we had an impulsive movement to the upside to break this high, and markets created a liquidity for itself here. We'll talk about liquidity later, guys. That is not what we're talking about. There was a liquidity creation here, so that is why the market actually used this place. The market created a liquidity here, and the market saw the next demand candle that is available to be used. Also, guys, you can see that we had a momentum to the upside. Remember what I said when we were at this side? I said when the market does not, especially when the market does not create a momentum to the upside, that is when usually you will see the market dip so much back inside your primary point of interest. But here we had an impulsive movement. In fact, we created a higher high, higher low, higher high above the break of structure. So you can see that we had good momentum to the upside, and the market came back to test the nearest demand candle, and then it started moving again. Now also here, guys, let me show you another thing here, guys. So we had our BMS to the upside here. Remember, we are always following the structure of the market. We had our BMS to the upside here. Let me just use this instead of okay, we had our BMS to the upside here, and this is our last this is our sponsored candle. This is our sponsored candle over here, guys. This is the sponsored candle, and you can see how the market beautifully used this area. Now the reason for the creation of the demand zone that is in between this place is because this place has actually been tested, and also the market gave a momentum to the upside, created a liquidity for itself to be taken, and then it chose the nearest demand candle that could be used. So that was why the market used this demand candle, and you can see there was actually no creation of liquidity above this place. You can see that we do not have something like this. We did not have something like this, like a higher high, higher low above the break of structure. The market only broke it to the upside and came back to your primary point of interest so that it can continue the movement to the upside. Also, we had a BMS to the upside here. See these guys. You can see these guys. After the BMS to the upside, what do we have? Okay, so this is our demand candle. Okay, this is, where is it? Okay, this was the last candle. This black candle, see what happened here, guys. This was the last candle that actually took out liquidity. This particular candle, this one, this black candle over here was the last one that took out liquidity. Let me mark it out for you. This particular candle here, this particular candle was the candle that took out liquidity. You can see all other candles formed above it. So this is the last candle for me. So, and you can see properly, guys, that we've had it tested. The market has tested it before moving to the upside. The market tested it with this particular low before breaking structure to the upside. So basically, I am not really expecting the market to come back to my sponsored candle. Okay, I'm not expecting the market to come back to my sponsored candle based on the fact that we've had it tested. Assuming we don't have it tested, you can see that the market did not give distance and momentum here. If we have not had it tested, the market did not give distance and momentum. I would have expected it around this area, and for the market to continue moving to the upside. Also see this, guys, we had a BMS to the upside. So let me use this again. Okay, this is our BMS to the upside, guys. See this, guys, this is our sponsored candle. This is basically my sponsored candle, and the market came back to beautifully use it, even though it did not tap inside it, but the market came back to an area to test it. See this also, guys, this is a BMS for me. This is a BMS for me. We had the BMS to the upside. See this, guys, this is very beautiful, and then the market is using it so much. So we had our PO high. Where is it? This is our sponsored candle. The market came back to properly use the sponsored candle, and then it continued to the upside. So we had another BMS to the upside. This is actually simple, guys. We had another BMS to the upside. After the BMS to the upside, our sponsored candle, where is it? This is our sponsored candle. Where is it? This is it. This white candle is what we are going to be marking out as our sponsored candle. Why, guys? Because you can see this. This was the last one that took out the low. So we're marking out this as our sponsored candle. The market did not tap into it. The market has not tapped into it. So I won't be surprised if the market actually comes back to tap into it and continue movement to the upside. So this is how you are going to be analyzing the market. Pick out your sponsored candle. Look for your break of structure. Mark out the last candle that happened, the last candle that was created that took out liquidity. Mark it out. Once you are able to mark that out, check if it has a fair valued gap, and if it does have a fair valued gap, then you wait for the market to come back to that area, and then you pick your buy. You look for an entry confirmation on the lower time frame, and then you keep doing that, rinse and repeat, and then you'll see yourself make a whole lot of money. You can see, guys, this is very, very simple, and I've shown you on this volatility 101s. Actually, volatility 101s is my best asset, so using it is very fun to me, and I really loved how it played out. You can see, guys, also if you check to the left hand side, you will notice that the market has actually been doing that over and over again. The market has been doing that over and over again. So that's going to be the end of this content, guys. Kindly like and subscribe to my YouTube channel. Also share to your friend, guys. I'm going to see you guys in the next video. Keep living in the atmosphere of profits. I'm going to see you guys next. Bye, guys.